Hi, morning, everyone.
Good
We just give a
morning.
few, we just give you a few more seconds, then we can start. Hi, morning. This is our Saxo Apex Strat Team Monday call, and we just want to go through a few things happened last week and also what's going on for this week. And last week, I think that the key things is really the PCE numbers and the personal consumption expenditure price index, and it came out much stronger than expected. It came in at 5.4%, and the core was 4.7%, and also for December there's also revision up. I think the key thing is really the one of the preferred measure of Fed Chair Powell, and the PCE core services. Less housing. This is mainly because this is the most key part, and the Fed Chair Powell is concerned about this number, and this number also up 0.3% to 4.6% from December's is 4.3. So it's overall it's quite a white hot number. So and that has caused the market to intensify the process. It started in early February, basically to increase the chances of more than 2 rate hike. Now is that the market's now actually pricing in 325 basis point rate hike, and March, May, and June meetings. And in fact, the market also started pricing in maybe some chance for the Fed to return to 50 basis point rate hike at the March meeting. And also this chart you look at is the SOFR contract June December spread. And what it means is between June and December, and throughout November, December, January, over the last few months, the market expecting a rate cut of about 50 basis points in the second half of the year, from July to December. But starting from February, and the market has started to pricing out this rate cut, and on Friday and last week, especially on Friday, the market has basically remove most, and if not all, the hope of having a rate cut in the second half of this year. There's still a little bit of rate cut being priced in, but has been quickly vanishing. And so the spread has narrowed from something like minus 60 basis point. That means it's a rate cut of 60 basis point to as of close of Friday, it's only at minus 11 basis points. So that is not so much rate cut hope remain in the market. And so, of course, and with this, when the market dashed the hope for rate cut and increase the pace of tightening, and we have been seeing stock market basically react poorly, and over the week, and S&P down 3%, and Nasdaq 100 down almost 4%, and bond yield is really shooting up, and you see 2-year yield jump 20 basis point over the week, and then it's on Friday the 2-year is up 12 basis point, and the 10 years is yield is up 13 basis point, and on Friday it up 7 basis point by only on one day. And then that caused the dollar to overall is especially dollar yen as on Friday was rather strong, and also also commodities is under some pressure, with gold breaking down, and also copper going below the $4 mark, and that I think Jessica will talk a little bit more later on. And so I think I pass it to you, Jessica, on the U.S. stock detail on the stock market and also commodity market.
Thanks, Redmond. So just further to what Redmond said, great points about the commodity prices pulling back. And the reason for obviously commodity prices pulling back is the strength of the higher USD. And so as a result of higher commodity prices, we are seeing broad commodity equities be squeezed now. And so we did have BHP and Rio Tinto, the largest mining resources stocks around the world, are doing pretty well, but they're seeming to take fairly hefty haircuts here. And as a result, that's putting pressure on some of the equity markets. For example, the ASX 200 that has been in an uptrend, but it's now moved into a downtrend. So it's in a short-term downtrend as a result of the commodity giants pulling back, because the strength of the commodity run has kind of lost its heat from the US dollar paring back. One thing that was particularly strong last week was the iron ore price. I wouldn't say it was strong, but out of a weak basket, it kind of stood out. And as a result, we didn't see as large falls as you might expect in BHP and Rio Tinto. For those longer term investors, we are still seeing clients buy into the larger cohorts of the mining sector, BHP and Rio Tinto, and we're seeing optionality also increase as well globally in some of those larger commodity names, particularly because we are expecting commodity prices to pick back up later this year, but for the moment, it seems that there is a fair bit of weakness. In terms of company news to watch this week, there's lots on offer. And we do have some of the oil and gas giants reporting. So we do have Occidental Petroleum, who is reporting today in the US on Monday. So Occidental Petroleum, a very large oil giant. So I guess all in all, remembering we have had so far better than expected earnings reports from the energy companies this reporting season. So year on year, we've seen the strongest increases in energy earnings, and also quarter on quarter, most love has been in energy earnings as well. So we're expecting this to play out in Occidental Petroleum later in the week. Canadian Natural Resources, Canada's 5th largest energy company, will be reporting. But I think tonight will be really interesting in the US, particularly as Australia's largest oil and gas company today reported that their profits trebled, and their profits went up by over 220%. Broadly as well, we have seen margin compression across equities in the quarter, and also for the full year reporting season that is underway in Australia. So margin compression has been a theme that continues to dominate, where we've seen energy companies deliver upside surprises. So we saw that today with Woodside. Their dividend significantly increased for the period from $1.05, that's US dollars, up to $1.44 US. So their full year dividend payout now is around $5 billion US dollars. So again, this is something that we're continuing to watch. Last week, we also did have better than expected lithium company earnings. Again, just really seeing the energy cohort of the market continuing to outperform the broader commodities at the minute. So we heard from Albemarle 2 weeks ago, and then we heard from Australia's Pilbara Minerals and Allkem, who all reported better than expected profits and declared some of their first ever dividends last week for the periods ahead. So that is something that we're continuing to watch. And just lastly, from my end, the other interesting part of the market to watch this week will be brewers. So I guess most retail investors don't trade them, but we do see sophisticated investors put them in their portfolios. So brewers. So in Hong Kong, we've got Budweiser Brewing reporting. The FIFA World Cup could have likely boosted Q4 revenue for Asia's largest distributor of Budweiser, etc. Beers. So that's something that we'll continue to watch. But I do think you've got to keep in mind that Bloomberg is expecting a very sharp Bloomberg consensus is expecting a very sharp pullback in net income, so a dive of 75%. Also, don't forget, in South Korea, they're increasing their beer tax by about 4% per litre in April. And we do have other Asia Pacific brands that Budweiser is likely to raise prices upon because of the proposed tax hikes in the Asian continent. So that's something that will likely dominate earnings. But then later on in the year, in the week rather, we hear from the world's largest brewer, Anheuser-Busch InBev. They're listed in New York, and they'll probably gain a little bit more attention than Budweiser listed in Hong Kong. The reason for that is because we saw options increase last week, so option volume was up 8%, and that's because earnings per share is expected to go up from 1.94 to 3.01. So basically, the market is expecting strong earnings on the back of the reopening trade. I might just leave it there and then hand it back to you, Redmond, for what else you're watching this week.
Yeah, and just one thing to add in the commodity front, lithium's prices has been coming down quite a bit lately, and there's also trend is the supply seems to be picking up and exceeding demand for in some forecasts for this year. So there's some pressure in the lithium price lately. So and then is back to the also is a little bit on the FX, and on Friday Mr. Ueda had its hearing at the lower house, and basically he was less hawkish than market fear. He probably pretty much is mentioned that he's likely to at least at the beginning to continue the current ultra loose monetary policy in Japan. And today he will be appearing to do his testimony in the upper house, and so we hear more from him. And so I mean, it's basically that's add to some weakness in yen since Friday, and then it's back in Hong Kong and China. And Hong Kong, the Hang Seng has been quite weak, and last week is the fourth consecutive weekly loss, and since the January 27 high, and Hang Seng has come down about 12%, and mainly I think is the market has been waiting for some more concrete and evidence from recovery in the real economy. So far we have been seeing survey data and credit data has been picking up, but we still need to see more from the real economy. And also the tension between the U.S. and China now on over the Russia and Ukraine conflict, and that will be something since it has hit up recently, and the U.S. alleging China's role in assisting Russia's invasion into in supplying a weapon, even though at the moment I think the latest is the U.S. said is the thing that the Chinese leadership is considering, but there's no evidence of there's any weapon being supplied from China to Russia. But that is still a hotspot, and so for something a fresh point, I think we need to monitor very closely, especially President Xi will be seems has a plan to visit Russia. And but before that, I think it's also there's also some concern on the market about the potential shake up in the financial leadership in the financial over the financial system, and some change in personnel, and so starting from yesterday until Tuesday, the Chinese Communist Party Central Committee is hosting a plenary session, and this session it will prepare for we'll discuss the work report, and also we'll prepare for any personnel changes for the two session meeting in China, starting on the 4th of March. And 4th of March, the political consultative conference will start, and then on 5th of March, there will be the National People's Congress will begin to meet. That will probably last for a week, and that will decide on the next administration. So there's some so I think for this
Lots
week,
to watch.
the investor will be watching those. And just lastly, last Friday is the PBOC issue the quarterly monetary execution report, and in that report, the tone is basically it's a little bit more emphasizing stability instead of boosting liquidity further, and in some of the languages they use, and that is actually more talking about focusing on stability and not so much is a lot of not to inject excessive liquidity, and also warn about asset bubble and so on. So that also weigh on the market a bit. And so this week we have the two data. I think on the data front, most important will be the US. On Wednesday we have the ISM manufacturing, and then that's in China. We will also have the PMI number from China.
Absolutely, that's going to be front and center and definitely key, and we're expecting good news, I believe. There really important data set, Redmond, as you said, because the next monthly activity data won't be available till mid-March, I believe. So that'll be really important. And just in the interest of time as well, I think we should also point out, in case you didn't catch it, last week our team launched an Asia Pacific Tourism Equity Theme Basket, and investors and traders, we'd like to point you in the direction of this. You probably might see some really strong performance there in some of the columns. Indeed, year on year, a lot of these stocks are up, and year to date, it's worthwhile noting that some of the best performance across our region has been from Asian tourism companies, indeed, on the back of the reopening trade, as Redmond said when he opened the call. So that's something that we wanted to point you to as well. And just finally as well, reiterating what Redmond said about defense. Defense is, of course, front and center, and we just like to point you to where you can find a list of defense stocks. So if you refer to our website under research, where we can see research and stocks, you'll see under Saxo's equity baskets, you can see a list of our defense stocks. And indeed, some of those defense stocks are doing quite well, up year on year. And just rounding it all out as well, just reiterating what Redmond said about stocks and bonds, they're adjusting to 325 basis point hikes. We're also continuing to watch the Asian Pacific tourism theme, as well as our luxury good equity basket. And also keep in mind the Aussie share market, the ASX 200, is in a short-term downtrend. Redmond, do we have anything else to say before closing off?
I think we have covered everything. I think this so have a very happy trading this week.
Yep, wonderful indeed. So much to watch and consider, and stay tuned to our daily analysis each and every day. For any questions, feedback, or comments, please reach out to your relationship manager or your global sales trader. From Redmond, Wong, Charu, Chanana, and myself, Jessica Amir, have a wonderful trading week.
Okay, bye-bye.